What's going on, you guys? My name is Daniel, and here on this channel we talk about stock market investing with a focus in the Canadian stock market. And in this video today, I'll be talking about my Wealthsimple portfolio and giving you guys an update on how it's doing. So if you guys don't know what Wealthsimple Trade is, it's probably the best Canadian stock brokerage out there for anyone who's interested in investing in the Canadian markets. It offers $0 commission fees, has a very simple UI and UX design to the whole platform, and ultimately it's a pretty easy platform to use and to get started with investing. In the past 1 month and a half, I personally saved anywhere from $100 to $200 in commission fees because I did 20 different transactions in my portfolio. And if you sign up today with the link in the description or the pinned comment, you can get $10 for free. One last thing about Wealthsimple Trade is that they're a predominantly mobile platform. Originally, you could only trade on mobile. However, today I have some news for you guys that I got early access to the desktop platform. And maybe some of you guys did as well. So I'll be doing a quick drive through the whole desktop platform and showing you my portfolio in there instead of on the screenshots with my phone. In the remainder of this video, what I'll be talking about first is the buys and sells that I made in the past month and a half. Next, I'll be scrolling through my portfolio on Wealthsimple Desktop and just giving you a few thoughts about some of the companies that I think are worth mentioning. And lastly, I'll be talking about some positions that I'm looking to add more into for the future coming month. So since September 24th, we're going to talk about what I bought and sold. So starting off on September 29th, I bought 4 shares of Real Matters at a cost basis of $25.40. Then on September 30th, I bought 100 shares of BlackBerry at $6.25 for a swing trade, which I'll show you what happened to it later on in this video. That same day, I also bought some Grand Columbia. I bought 5 shares at a cost basis of $6.20 as a dollar cost averaging technique. Fast forwarding to October 25th, I bought 80 shares of Well Health Technologies at a cost basis of $7.15. On October 7th, I decided I couldn't just buy Well Health, I had to buy some CloudMD as well. So I bought 100 shares of CloudMD at $2.03 per share. On October 15th, I did a lot of buying and selling, and here's the stocks that I sold. I sold 50 shares of Aritzia at a cost basis of $21.45 after they came out with their earnings and the stock popped. And usually Aritzia stock tends to drift a little bit lower after their initial pop from earnings, which is why I sold off 50 shares. It wasn't all my shares, but it was time to take profits from Aritzia. I sold all 70 shares of my Sienna Senior Living at a cost basis of $11.83. I saw these retirement residences making a bit of a comeback. I thought I'd cut my position here and get out because things could get a little bit dicey with the whole second wave coming. As well, Sienna Senior Living got a bit of a bad rap in June this year on how they handled COVID in their residences. For that reason, I was looking for the perfect opportunity to sell out of this position, and October 15th was that date. I also sold out of my BlackBerry position all 100 shares at a cost basis of $6.80. So at the end of the day, I made about $55 on the swing trade. After that, I sold out of my Park Lawn Corp position all 30 shares at a cost basis of $28.37. The reason why I sold out of this position is because I got a bit of a change of mind on how society operates. I've noticed that we as a society don't care much about old traditions. And I see funerals as a bit of an older tradition. People don't care as much about having their funerals in a funeral home. They much rather do something a little bit more hip, maybe getting their body scattered in the ocean or doing it in their backyard or something a lot more simpler. People don't care as much about having a fancy funeral, and that will ultimately have some sort of effect on PLC going forward in the future. So I decided to take my profits here and sell out of it and use this money and deploy it into other growth stocks. The last position I sold out here in the state was SOT.UN, and I bought into this position mainly because the dividend was cut and the stock dropped severely, and I thought that I could catch this falling knife. However, it kept on falling even further, and this is a lesson learned. So I sold 100 shares at a cost basis of $3.71, and ultimately that was roughly a loss of maybe $1.50 per share. In contrast to all my selling off on October 15th, I also bought a few things. The first thing that I bought was REI, and I bought 20 shares at a cost basis of $14.70 as a dollar cost averaging play. I also bought 150 shares of HEO as my starting position in this company for a cost basis of $1.97. And if you want to learn more about HEO, Daniel Pronk has an amazing video on that, so you should go check that out. As well as, again, do your own research on the stock just like I do as well. So I looked a bit into HEO and figured it was time to take the plunge here and start a small position. The last stock I bought on this day was some more CloudMD. I bought 200 shares at a cost basis of $2.59. And the reason why I bought here was because of technical analysis, honestly. And I explained this in a previous video, so if you want to go check that out, you can click on this video right up here. Moving on 6 days later, I bought some more WellHealth Technologies, so you can see that I'm averaging into my telehealth stocks here. I bought 25 shares at a cost basis of $7.72. And on the same day, I also continued to dollar cost average into HEO. I bought 50 shares at a cost basis of $1.83. At the end of October, I continued to buy WellHealth Technologies. I bought 25 shares at $7.58. So you can see I'm dollar cost averaging into WellHealth Technologies and buying it up as I get more cash into my portfolio. The last thing that I bought in October on this date was REI again. So I continued to dollar cost average into REI. I bought 20 shares at a cost basis of $14.30. Now moving into November, I bought some FLT on November 5th. And the reason why I bought some more FLT was A, dollar cost averaging, and B, I looked into the business a little bit more, and honestly, I love drone technology, and I think this is a good speculative play for it. I think that FLT is proving out that they are going to be able to grow their revenues with new contracts that they have. They're still bleeding a lot of money, but they do have a good amount of cash in the bank to help fund their business going forward now. And I think eventually we'll see some sort of explosion in drone technology, and this is sort of my speculative bet on drone technology. I bought a total of 200 shares at 63 cents per share. Then today on November 11th, when I'm filming this video, I made some more purchases. I started my position in Shopify finally. I bought one share at a cost basis of $1,190.98. And lastly today, I bought some more Absolute Software. I bought 10 shares at a cost basis of $14.25. So that concludes all the buys and sells that I've done in the previous month and a half. Now let's jump into Wealthsimple Trade Desktop, and I'll show you my entire portfolio there if you're interested. So we're here on Wealthsimple Trade Desktop, and it's a little bit more limited than the app. For example, I can't even scroll along this chart here to see how much I've deposited, nor can I even see the value of my account at these points in time. And going down, I can't even add funds right now. This is not available. I can't withdraw funds, and I can't transfer an account. So these things are still under development, but still it's great to have this platform to see how the portfolio is doing on the computer rather than on my phone. So now let's go through the portfolio. I have 60 shares of Absolute Software, 10 shares of AltaGas, 25 shares of Algonquin Power and Utilities Corp, 25 shares of ATS Automation Tooling Systems, 50 shares of Aritzia, 35 shares of BPY Brookfield Property Partners, 4 shares of Canadian Apartment Properties, 70 shares of Chartwell, 20 shares of Docebo, 40 shares of Dye & Durham, and let's just pause here. So I covered Dye & Durham in the past, and we know that the stock price ran up to around $27 or $28 per share. However, it's since come back down to the $21 level, and the reason why for this is probably because Dye & Durham has been raising a bit of cash here. We can see on their IPO, they already raised $150 million. Then in September, they raised an additional $50 million because they saw the stock price shoot up to about $20 per share. So after the stock basically 3x since their IPO, it kind of makes sense, and it's a no-brainer for management to utilize this uptick in share price to raise more cash. And recently, a couple days ago, they announced another public bought deal offering for $175 million. So maybe investors are a little bit scared for Dye & Durham and how they're raising quite a bit of cash right now off of investors' backs. And maybe people don't really like how Dye & Durham already did 3 public raises in the past 4 months or so. So that's my speculation as to why the shares are trading sideways for the last little bit. One more thing to note is that Dye & Durham actually announced in their quarterly earnings that they just released that they're paying a dividend. So this is quite interesting for a company that is still not really yet profitable, and they're paying a dividend. Now moving further into the portfolio, we can see that I have 400 shares of CloudMD, 800 shares of Drone Delivery Canada, 10 shares of Fortis. I have 15 shares of Grand Columbia, which I'll probably end up selling out of sooner or later, maybe when it hits the $7 mark. 65 shares of Canada Goose, 10 shares of Hydro One, 200 shares of HEO, 45 shares of Lightspeed, 40 shares of Manulife. And for Manulife, it was quite interesting when the whole Pfizer vaccine was announced. Manulife shot up like a rocket. It went up like 20 or 30% in a single day, and now I'm actually up on my Manulife position. Maybe I'll sell out, maybe I won't. I'm still thinking about it, as I'm trying to shift this portfolio more to a growth-oriented portfolio and only keep the really solid dividend stocks. For example, REI. Going down further, we have 25 shares of Real Matters, 60 shares of REI, 1 share of Shopify, 600 shares of Storage Vault Canada, 5 shares of Waste Connections, and 250 shares of Well Health Technologies. A few last things that I want to show you on this desktop platform. First off, you can see on the right hand side there's a watch list here. So these are all the stocks that I'm watching. And lastly, let's just click into one of my positions. So if we go into Ritzy here, you can see how the screen looks like for an individual stock. You can buy and sell here on the right. You can choose if it's a market buy, limit buy, stop limit buy, and the number of shares. As well, further down, you can see all the statistics on the stock and how I'm doing in terms of my personal performance, and also some of the market details. One thing that I don't have here that's on the mobile website is the activity feed. So you can't see all the Ritzy activity that I've done in my portfolio. So that concludes it for my portfolio, and next I'll be talking about some of the stocks that I'm looking to dollar cost average into over the next coming months. So the first position that I'm most interested in adding to for the coming month is Shopify. I just started my Shopify position today, and I'm planning on adding more because I can see Shopify probably falling a little bit more. I originally mentioned in my stocks to buy for November, and you can check that video right up here if you're interested, that I'm looking to enter into Shopify around its 200-day moving average. However, I decided to start my position in Shopify with one single share and build that up slowly over time instead of hoping that it comes back down to its 200-day moving average, because there's no guarantee of that. And looking at Shopify right now, it's traded sideways for quite a little while, showing that it's consolidating, and right now it's dropped down to the bottom resistance line, so that's why I bought into Shopify at these prices today. Another position that I'm looking to continue building out into a larger position is Docebo, and I think that learning management systems are going to be huge in the future. This business I see staying for the long term, as well as continuing to grow rapidly, because I think that with this whole pandemic happening and companies realizing that they can shift more workers to work from home and therefore save on office rent, they're going to require a learning management system to transfer knowledge from employee to employee. And Docebo's system is particularly interesting to me because there's a social aspect to it. So employees can also upload content. It's not just like the teachers within the organization or those who are experts. Anyone can upload knowledge to the system. And if you look at companies right now, they generally use something called a wiki page. So you have an internal intranet or wiki where people write up documents on their knowledge. However, I think video is a very powerful platform, and people would rather watch videos than read documents sometimes. Because the saying goes, a picture tells 1,000 words. Think of how many words that you would actually need to describe that video with thousands of pictures in it. That's why I think Docebo is such a powerful platform as a learning management system. Yes, there are other learning management systems out there, but competition is always very healthy, because with competition, there's more drive to innovate and provide a better product. And ultimately, if Docebo doesn't end up winning the whole space, they probably will be bought out, and as a shareholder, we'll probably see some good returns if they do get acquired. The last stock that I'm looking to average more into is Well Health Technologies. And for those of you who watch my channel, you'll know that I love telehealth stocks. However, Well Health Technologies is not just telehealth, they're basically an entire digital health platform. They have things like an electronic medical record system. They also have an app store for that right now, which is allowing third-party developers to develop apps for their EMR system. And ultimately that will attract more and more customers. And I think this is a pretty huge thing for Well Health Technologies going forward, because I see it as a similar strategy to what Apple did with their whole app stores, which made the iPhone wildly successful. And I haven't heard of any other platforms out there, especially in the digital health space, having some sort of app store. So Well Health Technologies is definitely an innovator, and they are the market share leader in Canada right now for this. And I think for the couple months looking forward, we could probably see Well Health actually trading sideways, which is why I'm looking to buy into it right now specifically. And if it doesn't trade sideways, it will probably drop down a bit, because the stock has taken a huge run this entire year. It's up around 380% year to date, and I think that it's due for a pullback. So I'm looking for some sort of pullback, or if it does trade sideways, I'll be dollar cost averaging into Well Health for sure. If you guys enjoy this update of my portfolio, leave a like down below. If you're new here, subscribe and hit that notification bell if you want more Canadian stock content, as well as I put 2 videos up on the screen here. One of them talks more in depth about my latest thoughts on telehealth stocks, and the other video is about 9 stocks I'm watching in the month of November. If you guys are over there, I'll see you there. If not, keep up the grind and have a great day.